Hi, I'm here at the Mortgage Business Expo and I'm speaking to Ray McCarthy, Head of Distribution at Answers in Retirement. Welcome. So what do you think are the main reasons for the rapid growth of the lending market over the past 5 years?
It's actually in the last 5 years the market's grown tremendously. I think it was a £1 billion market in 2013 and that had increased fourfold by 2018. So it is just in the last 5 years it's really sort of grown. I think you've got to look at two factors. Demand, first of all. I mean, obviously we know that there's an aging population. We know that it's the majority of people over 55 that own property. I think what's changed is pension freedoms. So you've obviously got implications around tax on making cash withdrawals from your pension, which has made equity release now a more attractive alternative with interest rates being so low and much wider product choice as well. I think another issue is debt. Debt has increased something like 47% in the last 5 years amongst the over 55s. Again, that's another driver for it. But I think the main reason is the amount of product innovation in the market. There are so many more product features now around servicing the borrowing. You know, clients can make ad hoc voluntary payments, service part of the interest, all of the interest. They can make partial redemptions or even redeem the loan if they move house after 5 years. There's all these product features which make them appealing to a wider audience. So I'd say over the last 5 years, that's the main reasons for the growth.
Excellent. And do you see any future barriers to the retirement lending market continuing to grow at these levels?
I think primarily equity release is quite unique in that customers don't know they need it. It's not a financial product they've engaged with throughout their lifetime. They've taken out mortgages, insurance, but equity release is something they've never taken out. So as a result, people don't go shopping for it. What they do is they go to their financial advisor and say, you know, I need to create more income, or, you know, whatever the issue is. And I think the main issue at the minute is there's not enough advisors out there that have a good awareness of the product. There's only about 1,200 advisors active in the market at the minute. So I think for that reason, we need more advisors to understand the product and be able to talk to customers about this as a product. So I would say advisor numbers is the main reason, or the main sort of barrier to the growth of the market. There's plenty, as I say, of product features. I think there's not much else that can be done to the products to make them more flexible. So it's really down to consumer awareness, and that can only come through advisors knowing about the product.
And what suggestions do you have for advisors wanting to enter the market?
I think the main thing I'd say is understand that it's not just a mortgage. I mean, equity release is 99% or 99.9% made up of lifetime mortgages, but it's unique in that it's designed to fund a retirement. You know, in 2/3 of cases, people are taking it out to fund their whole retirement through a cash facility. For that reason, they need to be aware of the wider issues that customer is going to go through during retirement. And I'm talking about, you know, partners passing away, moving home because they become immobile, going into care, state benefits. So for an advisor to operate in this market, they need to be aware of all the wider issues around retirement. We launched the ALA to Life Academy in 2014 for that purpose. It was to make sure advisors had a broad knowledge of retirement and all the issues that come about as a result of, you know, state benefits, care and that sort of thing, and understand the product features that match to those different needs. In addition to that, the Later Life Academy is all about helping advisors attract more customers as well. So it's just about getting knowledge of the types of issues that people go through and understand the products properly. Yeah.
And what role is technology currently playing in the sector?
Technology, well, in the past, very little. It's come from humble beginnings. You know, it was, like I said, only a £1 billion market 5 years ago. As a result of that, technology costs a lot of money, and there hasn't been the investment. That's starting to change, thankfully. So lenders, product providers, sourcing systems, they're getting a lot better now to cater for modern retirement lending products. We launched air sourcing in 2016. That was pretty much designed to take an advisor through the whole process. So, I mean, equity release is the same as any other financial product. You do your fact find, you do your research, you're producing your suitability report, you're getting your KFIs, and air sourcing was designed after 18 months feedback or advisor consultation, and it was all about taking them throughout that process without having to rekey any information. So they can source using all the modern features of products, they can request their KFIs on the system, they can complete their fact find on the system, and the system will write the suitability report for them too. So it's playing a much bigger role. I think the thing we're seeing now is lenders are all going online with applications, and we are starting to integrate with them. So with several lenders now, you can get your KFIs instantly on the software, but also we're discussing with lenders now so that they can just apply, so that the market comes more in line with the mortgage market.
Excellent. Thank you very much, Ray, for your time.
You're welcome. Thank you.